Hey traders, Stephen Kowitzel here with thetradersplan.com. Today I am going to show you how to find opportunities in emerging markets. So stay tuned. Okay, we're here at iShares.com and I'm going to show you a tool. If you've been following me for a while, you know how much I like this tool. It's free, it's easy, really how to break down the sectors. So what we're going to do here is we're going to go to iShares.com and then go to their tools. And what we're looking to do is I'm looking to find the best returning ETFs, individual countries, sectors in the market today. So we're going to break this down. So right here, we clicked on that index return chart, right? Tools, and then iShares, and then index return chart. So what I'm looking for now is, in December of last year, I created a emerging markets webinar, and I really talked about how beaten up the emerging markets sector is and how I feel there is major long-term potential in the emerging markets area. Well, here we are about 3 months later, and it's really starting to look like the emerging markets are really starting to outperform the S&P 500 and other sectors, and I'm going to show you how. So first, I want to look at, what has really transpired. Go to the time period, the last 30 days, and then go down here to the regional multi-country, okay? So what I'm looking for is what pockets of the world if the world is really producing the best returns. And when I looked at the last 30 days and then I looked at the regional, clearly Latin America, you got the Pacific, Asian countries, you got the BRIC countries, but a lot of these regional sectors are really going to be emerging markets, right? But clearly, there's emerging markets are at the very top of the leaderboard. Now, whenever you decide to run this scan, it might be something different depending on when you're watching this training series, but it really doesn't matter. But right now, I just want to show you how to get there and how to find the best performing regional sectors. Now, think of these regional multi-countries think of them as sectors, and the individual countries are the industries. So you have the sectors and then the industries as you break it down. So now we can see what's clearly a leader over the last 30 days is Latin emerging markets. Now let's kind of cross-reference that with the last 90 days. Still, it's not even close. It doesn't matter what it is. Latin America emerging markets right now is really knocking the socks off of everything. So now I want to find out, okay, within that Latin America, I'm going to dive down even deeper. What industries or what single countries are the best performing countries? Because now we have the sector, right? We know what sector is good, and that's Latin America. Now, what is the single best country? So go down here to single country. Now, if you look at the last 3 months, clearly you have Indonesia, right? You have Peru, Russia, Turkey. I'm looking for some cross-reference between the regional sector that I just looked at. So clearly to me right now what stands out is Peru, right? And Brazil is down here in the last 3 months. Now let's go to the last 30 days and take a look at that. Okay, boom, Peru and Brazil. So not only is Peru and Brazil pretty strong as far as any single country that iShares tracks in the last 90 days, they are definitely the strongest by pretty significant margins on the 30 days. So these are two ETFs that we really want to pay attention to. So what I want to do now is I want to really compare, and I want to show you really what tools I use, and I really want to compare why I think there is such huge opportunities in emerging markets right now, and why I continue to think that. And I'm seeing a lot of these single emerging market countries pop up on my scan. But real quick, now again, if you saw my webinar back in December, you might be seeing some of the same stuff, but the United States, when you look at GDP growth, the United States is only supposed to grow 2.2% in 2016. But look at some of these countries: Ethiopia, Turkmenistan, Congo. Now you're looking at 9% growth average from 2014 to 2017. That's phenomenal, right? I don't think the U.S. is going to see a 9% growth rate anytime soon. Now, we don't have an ETF for each one of these individual countries, right? But we do have sector ETFs like Africa ETFs. But what has amazed me, and we're going to talk about this more, is how beaten down the emerging markets is and how far off of the high that it is versus the GDP growth rate of these countries. So, for example, you have India, right, that is expected to average 7.5% GDP growth 2014 to 2017, and that ETF is INDA. But if you look down here, I might have not have done it with India, but I know the ETF has gotten slammed. So you have these countries that are growing, right? Growth is there, but the stock markets are way down. So there's a big discrepancy in the growth rate of the country versus stock market prices. Eventually, right, someone's going to have a come to Jesus meeting, and they're going to have to come back together. And I do believe, since the stock market prices are already so beaten, I think the stock market prices are going to rise again to come back up and match really what the growth rates are of this country. So these are the emerging market sectors that I've broken down. So you have the iShares emerging markets, and this is EEM, right? This is really the benchmark for emerging markets. You have what's called frontier markets. Now, the frontier markets, those are really your Africas of the world, your Perus, your countries that aren't quite considered even an emerging market like China and India, that are the up-and-coming emerging markets, right? You have Market Vectors Africa ETF, AFK. You have the iShares Asia ETF, AAXJ. You have iShares Latin America, and then you have Market Vectors Gulf States. So when I wanted to break down the emerging markets throughout the world by regions, these are the regions I came up with. You have Africa, you have Asia, you have Latin America, and then you have the Middle East, right? So I want to compare, and I'm going to kind of continue to confirm, and I'm going to show you another tool how to compare to find out of these regions what is really outperforming. But I just want to go down and I want to show you something real quick. Emerging markets, the EEM, it needs a 34% gain to reach its old high. The frontier markets need a 40% gain. Africa, 76% gain on this ETF to reach its all-time high. So, and you can see like Nigeria ETF. But here's the interesting thing. The Nigeria, its 2016 estimated GDP growth is 5%. That's still phenomenal. And yet the ETF needs 147% gain. So it needs to more than double to get back to its old high. So, this growth is phenomenal. Indonesia, 5.5% growth rate. It needs a 46% gain to get back to its all-time high. Now, I wanted to point out to Peru and Brazil. Let's go down here, in Colombia, because these are, we have already established that some of the Latin American countries are some of the strongest pockets in emerging markets right now. So really, and it's kind of funny because some of these Latin American countries, they don't quite have the growth rate of Africa, right? But for whatever reason, they're moving higher than the Africa ETF. So why is that happening? Maybe it's because there's just heavy mining in some of these Peru, Brazil, I don't know, overall commodities. But typically emerging market countries, they're going to be heavily correlated to the commodity that they produce, for the commodities that they produce. And when you have commodities like gold, copper, oil, you name the commodity, it's pretty much been beaten up for the last 3 to 4 years. That's probably the main reason why these emerging markets have underperformed so significantly, because the commodities that they produce, the prices are just beaten down. However, now all of a sudden, gold, it just entered a bear market, right? Copper broke out. Oil broke out of a bottoming pattern trading range. Now, whether it stays above that trading range, I don't know. But my point is, you're having a lot of these commodities break out, and you're having a lot of these individual countries break out. And if we can get some wind behind our backs, I can really see over the next 3 to 5 years there being some serious gains if commodities rally, right, or just put in a bottom in 2016 and then continue to turn into a bull market, a lot of these countries, I believe, are going to do very, very well. And so we're going to look at these and just kind of show you 6 of the 13 highest GDP growth countries are in Africa. So that just goes to show you there are tons of areas to find growth, right? Now a lot of these countries are unstable, for a ton of reasons, but that I'm not going to get into right now. But I just want to let you know that there are a lot of opportunities in emerging markets outside of your typical developed nations, and that's really what we're about to dive into. So let me show you something. So what I'm going to do now is I'm going to go to stockcharts.com. And this is something free. And what I did was, let me go to this. I pulled up what's called a perfect chart. Now, all I did was I took all these sectors right here, and what I want to do is I want to compare them side by side to, again, confirm what I found in iShares and see, okay, what is the clear winner? Because now I know emerging markets is really starting to outperform. So you can see right here in the last, let's just go, last 100 days, right? The last 100 days, Africa, right? This ETF has clearly gotten shellacked. Latin America has broken even, which is kind of impressive considering all these losses. So you have the benchmark right here, the EEM, right? You have the frontier markets, Africa, Asia, Latin America, and then the Middle East. Well, let's turn the tables a little bit. Let's look at what's happened the last 30 days. So the last 30 days, when you have the benchmark of emerging markets up 10.12%, right? Just the last 30 days. That's through March 8, 2016. The frontier, you have Africa has outperformed. You have Asia. A lot of these Asian markets have really underperformed what I would call the benchmark right here. Okay, but look at Latin America. Like, it's not even close. Latin America has clearly just catapulted above all these other, individual, you can call them industries, but individual sectors, these countries. Latin America has really, really outperformed. So what we just did is we really took, what we found on iShares in less than 60 seconds, right? And you can take these ETFs too and track them too. And then I took all the regional ETFs that really I could find that, were different, and I put them in this perfect chart. Now, this perfect chart right here is a free tool anyone can use, so I just want to show you how to find it real quick. So you go to stockcharts.com. So I don't have to retype them in. I'm just going to copy these ETFs right here. But you just go right here, drop it down, click that perfect chart right there. And then, I just copied and pasted it, but boom, now you have a chart, right? And the default is 200 days. I like this version, the histogram version, and then what I did was just change the date to 30 days, so boom, right? So now I showed you how to do that. Okay, so now that we've narrowed down within the emerging markets, we've narrowed it down from iShares to stock charts, we've narrowed down what region we need to be focusing on. Well, now let's break down that region and find out what is really, really outperforming. We've already looked at Brazil. We've already looked at Peru. Here in a second, let's go look at some of their stock charts and see what I'm finding. But I want to show you, I pulled up a chart and I want to show you this. Emerging markets, now this is emerging markets in comparison to the S&P 500. And again, this is a free tool. You can just go to stock charts, enter the symbol, and then enter $, $SPX. And what I would do is go to this, type and click on solid line, and you can get really any history you want. But what's happening here, as I'm comparing the emerging markets, let me kind of take off this inspect. I'm comparing the emerging markets long-term performance versus the S&P 500. Now, what's happening is when this line is sloping upwards, it means the emerging markets are outperforming the S&P 500. Now, when emerging markets fall out of favor versus the U.S. stock indexes, it's downsloping. So clearly, right, you can see that from 2011, emerging markets peaked, and you would have been way better off just investing in the S&P 500 versus any kind of emerging markets because just they've been out of favor. And again, really that has to do with the commodity sectors and everything that is involved with emerging markets. But I wanted to show you why I pulled this chart off is one, I think that we're about to head up again on a long-term basis, right? But what can happen when you had a period from 1999 to 2011 where emerging markets just crushed the S&P 500? I mean, you're talking about some serious outperformance that can really make a difference in your portfolio. So sometimes it's really just good to look at a side-by-side comparison to see, okay, if you look at the long-term chart, am I better off, at least allocating more money towards emerging markets or at least paying attention towards emerging markets? Now, if you look at this on a very short, very long-term chart, clearly the S&P 500 is still beating emerging markets. However, I want to look, and this is a 20-year chart, by the way. I want to look at what's happened in, I'm just going to say the last 6 months. And because I'm starting to notice, right? So now, since this rally, and this rally being as of January 19th, 2016, you can see this line is sloping. Let me get rid of all the moving averages. So now this is a very short-term chart, but look, the line is sloping upwards. What this means is since the bottom of, or at least this rally of January 19th, emerging markets is clearly outperforming the S&P 500. So has the emerging markets put in a bottom yet? I think it's still early to tell. But what I'm really seeing is when we look at the individual country charts that we're going to look at in a second, a lot of these individual countries like Brazil, Peru, Colombia, they're breaking a lot of key pivots that are making me believe that the trend has changed, at least in Latin America, and that there is some real buying potential and some real buying opportunities in the Latin American countries, assuming obviously commodities. If commodities takes another leg down, emerging markets will probably take another leg down with it. But as of right now, emerging markets is outperforming the S&P 500 in the last several months. Now, this right here is a chart of the Latin America versus the emerging markets. So you can see over the same time period, the ILF, the Latin America 40 Index iShares, has clearly outperformed its benchmark, right? So when something like this has clear outperformance, it really has my attention, right? I start to pay attention. And when it starts to break key pivots, right, or key resistance areas, that's when I'm really going to consider, investing my money in such a stock or an ETF. So I wanted to show you this chart as well. And we've already looked at that chart. Now, let's go look at some individual countries that I have pulled up. And again, you can take these tickers and track them yourself. But let's look at Brazil and let's look at it on the weekly chart. I mean, you can see there. Let me get my chart tool out. Let me kind of move this out of the way. So this is the Brazil ETF, EWZ. I mean, you can really see, I'm not really trying to draw a trend line here, but I mean, how far this thing has fallen. This ETF was above 60 back in early 2012 and is now at about, or kind of bottomed around $18. Let's look at the monthly chart. I mean, you have this massive uptrend, right? And just to put this in perspective, this simple ETF went from $6 to $100. So this is just to show you what kind of growth you can get out of some of these ETFs when you get in early on a bull market. And I really think that we are kind of at the beginning stages of another bull market in emerging markets. One, because I feel commodities are going to bottom or already have bottomed in 2016. So you can see it was up. Clearly it crashed with everything else in 2008. And it never even, the Brazilian stock market never even made it back to its peak and has just continued to roll over. Now this is the ETF, this isn't the actual index. But now all of a sudden you can see, and if I track this price on a monthly basis, Just in the month of March, 9 days, this thing is already up 23%. So this ETF has not, and I'm just looking at some of these others, this ETF hasn't had anywhere, that was a 19% gain that month, but continued to roll over, hasn't had anywhere close to a 23% gain this whole downtrend, right? And this is a monthly chart, so that's something that we need to consider. Now, if we go back here, at the very bottom of this bear market back in 2002, this ETF had a 28% gain. Here, I'll try to raise that so you guys can see it. Had a 28% gain for the month, and then that started this massive move. Am I going to say over here that this massive move is going to happen? No. But what I'm saying is when all of a sudden on a relative strength basis, you have these countries that have been beaten down literally for 5 years, and then they do something they haven't done in a very, very long time, I really, really start to pay attention. So this is the monthly chart, and it's about at a key level area that it needs to break through. But let's break it down to now a weekly chart. So you can see on a weekly chart, clearly it broke through the 50-day moving average, all that good stuff. But now it broke above the 200-day moving average. And that's something that this ETF hasn't been above its 200-day moving average since October of 2014. And look at the volume spikes below. So again, volume really gets me to pay attention to certain things. So now I am paying attention to what is going on in this ETF because it is doing things it hasn't done in a long time. Now, what I would like to see happen, since it literally has, surged, I mean, let's kind of go back here. Last week alone, this ETF was up 25%. So it's clearly very volatile just for a single country ETF. But what I would like to see happen, maybe a nice little orderly pullback, consolidation, and then a breakout. And then there's your potential entry. I cannot get involved in something that's surged straight up. I need to wait for a consolidation because typically what comes straight up is going to pull back, it's going to consolidate, or it's going to come straight down. So I'm looking for that consolidation. But sometimes when you're looking at something that has been in a downtrend so long, and you can see right now, look at this level, this ETF level, you can see 25.50, 25.83. It is trying to eat its way through right here. So it hasn't, the price is 25.20. It hasn't quite cleared that yet. Maybe it will within the upcoming days. I think it's extended a little bit. But if it can clear this really long-term bottoming pattern, right, and it can clear these prices, I do believe that the trend has changed. And I do believe that it could clearly, well, it's already in a bull market because it was up 25% last week alone. But again, I'm looking for, probably a pullback and another consolidation and a breakout. And if you go back to the monthly chart, you can see what can happen if we can get in the bull market. I don't even know what percent gain is a $6 from $100, but when you get these emerging markets that are in major bull markets and that have high growth rates of, anywhere from 5 to 10% GDP, and then you get the perfect storm of all the commodities have bottomed, and then the commodities that they are producing are really starting to raise in prices that is going to help their economy and bring money into their country, you could look at something pretty nice. So that's the Brazil. Out of all the ILF, iShares Latin America, the Brazil single country has done the best, at least as of recently. Let's go down and let's look at the Peru stock market. So the Peru, actually, let's look at this on a weekly chart for a second. So if I draw some lines right here, you can see it's looking like it already broke out of kind of a V bottom right here. You could probably continue to draw this, but it's looking like it's already starting to break out. Volume is there at the bottom. So if we look at it on a daily chart, let me draw this across here, 2446. So it's kind of interesting sometimes how resistance levels can come together because you have this 2446 on the Peru iShares. pretty much the exact same price if you draw it across that this 200-day moving average is. And look at the volume that happened on this ETF as it punched through those resistance levels, right? So now what I would be looking to happen is I would be looking at this red line or this 200-day moving average to hopefully turn into support. Now, the Peru has already made a monster move from 1760 to 24. So, I mean, that's already a pretty big move. So maybe, hopefully, I'm guessing, hopefully it'll pull back and give us a chance to really get on board and break out right there. But it's interesting because, sometimes like just looking at emerging markets isn't enough, right? Then you break it down into region, and then you break it down into single countries. It's really no different than individual stocks, right? What's the top performing sector? Then within that sector, what's the top performing industry? And then with that industry, what's the top performing stock? That's exactly what we just did with these individual countries, okay? A lot of them are starting to break out and kind of hit really close to that resistance. So is it going to pull back? I don't know. I'm kind of thinking probably, but then again, I would have never guessed in a million years that Peru would have taken off like this and gone up, 20, 30%, 40%. I don't really know I'm not going to calculate that off the top of my head, but clearly 30% move. It's already made a massive move in just a matter of months, but it's not uncommon. Right? So if we go back, let's kind of do a little history lesson. So this Peru ETF was up 17% right here, 10% right here, 9% right here, 14% right here. I'm just trying to kind of get a gauge. Now it's up 12% right here and 12% right here. So it's had back-to-back 12% months, right? And it's kind of looking like that's approximately what it did back here, and then obviously it consolidated what it looked like for a while. This is a monthly chart for 6 months, so this thing could consolidate for a while, right? Because it just made a monster move, let it consolidate, but once it breaks out of that consolidation, I truly believe that there is no question that the emerging markets trend has changed, or at least the Latin emerging markets trend has changed, and there is probably a lot of money to be made in the next 2 to 3 years in some of these single countries. Now, again, a lot of things have to continue to take shape. If commodities roll back over, this story is going to be over, because I believe, you could basically overlap the price of oil and the price of Russia or some of these other oil countries, and they look exactly the same. They're going to track the price of the commodity they produce. Some of these Latin American countries are no different. Peru is a monster copper miner, also gold miner. Colombia is a little bit more diversified, and so is Brazil. But again, they're commodity-based countries. So let's look at Colombia. Now, this ETF has pretty much only been around since 2013, and really it kind of never had a chance, right? It went in this sideways consolidation. And then it broke, and it just completely broke into something absolutely ugly. So this is the monthly chart. Now, if an ETF can do like this on the way down, it can do the same thing on the way back up. Not saying it's going to go straight up, but I'm just trying to show you the strength and the volatility of some of these ETFs. They can do it on either side. My goal right now is to identify when this trend is changing and try to get on board and try to hang in there so some of these ETFs can make these moves, right, on the long term. But, let's take a look at it on the weekly chart. So Colombia did something different than the other ETFs. It's really the only ETF that made a small little uptrend and then a sideways consolidation, right, and then a breakout. If you look at Colombia and Peru, they were basically just V-shaped recoveries. This is something that I really like, right? I like a nice little uptrend, nice little 16% gain. It doesn't look like it, but it made the gain in about a week and a half, traded sideways for about 4 or 5 weeks, and then popped higher, right? Stocks, ETFs, countries, whatever it is, everything's going to stair step its way higher. You don't want something to shoot straight up, because then it's going to be very hard to get on board, or you're likely to get shaken out. So I really like what Colombia did as far as, going up, taking a breather, and then moving higher. But as you can see right here, Colombia, it met resistance at the 200-day moving average. It has not broken through, if you want to consider this a long, first stage bottoming trading range, it hasn't broken through these price levels yet. It's finding resistance. So this is slightly weaker than Peru or Brazil, but that's why we do this. That's why we analyze it, right? We want to see what's the strongest performers, which ones are punching through resistance, and which ones are finding resistance. And that is where we deploy our capital to the strongest ones, because when we do get a bull market, those are probably going to be the biggest winners. So again, if you look at this on a weekly chart, you had an ugly downtrend, right? You had a kind of little mini first stage consolidation right here. Now it did break out of this. Now it needs to break out of this, but you can always find resistance, especially when you're dealing with a downtrend. But right now it's stuck at that 200-day moving average. It has not been above the 200-day moving average since October of 2014. If it can break through along with Brazil and Peru, which I would expect that it will, I'm not saying it's going to happen tomorrow. It might consolidate for a few more weeks or a few more months before it does. And I actually hope it does, because I like long consolidations because that's healthy, right? Have you ever heard the longer the base, the higher in space? The longer those consolidations are, the more convincing the move is going to be when it punches through those resistance, and the more confidence you can have in holding it long enough for it to make a serious move, however far that move is. So let's look at something else. So that's the emerging markets Latin. All right, so let's look at ILF. Now ILF, the iShares Latin America, also has Mexico in it as well. But again, they kind of all broke the 200-day moving average in the exact same place, and they're all trying to punch through it. Brazil and Peru looks like they already have. This ETF is working on it. It's currently, if you look on the weekly chart, let me kind of track this. If you look on the weekly chart, it is less than 0.5% under this level. So it's clearly finding resistance, right? So maybe what happens is you get a nice, since it surged in a big way, maybe you get a nice little pullback, a nice little consolidation right under that 200-day moving average, and then you break out really in nice form. So again, right now, a lot is changing, a lot is happening that we haven't seen before. So this is just something that I wanted to bring to your attention, right? I've been thinking about, and I told you back in the webinar in December, I've been thinking about emerging markets for a long time. I've been waiting for this to happen, and it's starting to happen, right? And let's look at the EEM. So you can see the EEM, the emerging markets, it still hasn't really, it's still, a few percent. Let me just try to see this. I mean, it's still about 5% under its 200-day moving average. So it still has a ways to go, right? But if you already have a leader in Latin America, right, it's going to give me a little bit confidence that eventually, more likely than not, that this EEM is going to eventually probably build another consolidation, let this 200-day moving average come down, they meet each other, and then boom, a breakout. And that's going to give me a lot of confidence that the trend has changed. So I hope this was helpful. I hope this was educational. I showed you several ways on how to really break down, the regions, how to break down the individual countries on iShares to find the best performing ones, how to use stockcharts.com in some of their tools so you can really run some side-by-side comparisons, and really my case and why I think emerging markets has bottomed. Still could take another leg down, still could correct, but I still believe that it has bottomed, or at least is coming very close. It might fall back into a trading range, and I think that coming out of this bear market that the potentially U.S. is in, I think coming out that emerging markets are going to lead the charge, and they're going to lead the charge for several years. So if you thought this education was beneficial, this training, and you would like to receive more educational videos as I create them, you can hit the subscribe button on my YouTube channel. You can like this video and comment if there's something you would like to see next time, or if you have some questions, just comment on this video and I'd be glad. I check the comments about just approximately daily. So if you want to see my top enter and exit strategies for these stocks and ETFs, stay tuned. Hey traders, Stephen Kowitzel here with thetradersplan.com. I hope you enjoyed my most recent video lesson. There's going to be many more to come. I talk to traders all the time and they keep saying the same thing. They have a basket of stocks, but their timing is off. You know, when to get in a stock, when to get out of stock. They say, Steven, you know, I'm not making as much money as I should, or I'm losing money when I shouldn't be. So I designed and created the Savvy Trader course to really help you pinpoint the ideal entry and exit in stocks and ETFs to give you the highest probability of success. And as a bonus video, I want to show you one simple trick that's going to allow you to pick the exact bottom in stocks. So it's actually really simple. Click the button below, to the right, to the left of the video. I'm not sure where it is, but just click it and get your free copy of the Savvy Trader course, and I'll see you on the inside.